The one thing that we've seen since about 2010 has been the rise of domestic capital, which again helps the liquidity story. But it's different per country. In Czech Republic, in terms of number of deals, let's not talk about the volume of deals, in terms of the capital value, but just the number of deals. I mean, Czech capital makes up anywhere between 20% or 40% of deals done in any 1 year. I think in Hungary, domestic capital was the only buyer for a period of time, up until maybe 2 years ago. It was a DIOFA, one of the funds set up by the Czech National, the Hungarian National Bank. We're one of the buyers down in Hungary. In Poland, less so. I mean, in Poland, domestic capital doesn't play a big part in the real estate market, or not yet anyway. But what's happening in Poland is that they are developing a REIT product. So REITs will be available, they should be available in Poland within the next year, and it'll be based on an American REIT formula. So that will help bring in domestic capital. So that could also fall into the story as why perhaps real estate investment volumes will continue to rise, or at least stay stable in Poland for a period of time. So we haven't seen much domestic capital in Poland, quite a lot in the Czech Republic, definitely some in Hungary, Romania and Slovakia. Slovakia, yes, Romania, no, very little. In terms of cross-border, there are some cross-border transactions happening, and definitely some of the Czech capital has been looking at Hungary, for example, recently, been down visiting, looking at Romania. So it's just starting to happen at this kind of inter-regional.
This is obviously an oddity to the region. I mean, and it is clearly explained by its history. I mean, when the Iron Curtain came down in 1989, there was no domestic capital, period. Very much like there was no domestic capital in Germany or Austria after the war. I mean, it took decades to build it up. And you are now at a point in time where you've got Polish insurance companies who are basically starting to invest in real estate. I mean, that's something that's relatively new to the region. So there is a history of, in the early 2000s, 95% of the investment in real estate in these countries would have been cross-border, basically from Western Europe, US, Asia, etc. And now you do have a growing domestic sector. With people simply getting richer, the next generation coming in, money being inherited from one generation to the next, you have I would call it normalization. I mean, in most other countries, you would not expect to have 90% of the investment in real estate cross-border. So I mean, it's a trend that I'm not scared of. I just see it as something that should have happened.
I think you might be talking about the CBREGI portfolio, because they've come to the end of the life of that fund, and a Czech property company are buying 10 assets. Poland, Czech, Romania and Slovakia.
As just one remark, looking at the investment volume in Hungary this year, or the first half of this year actually, 1/3 was coming from domestic investors. Austrians and Germans are still significant, but the most important players are still the US-based equity funds.